Hello, it's Jordan, and this video is being recorded on the early afternoon of Wednesday, May 12th, 2021. Thank you for joining me today, and please like, comment, and subscribe if you're watching on YouTube. And in this video, I am going to discuss a chart, well, actually two charts, that signal a potential repeat of the 1960s and 1970s. So first, is a historical look at the gold stocks against the S&P 500. This is almost a 100-year look. We got the two historical indices here, the S&P TSX Gold, and then the Barron's Gold Mining Index at the bottom. Now I added some data I have from another index from 1927 to 1938 onto the Barron's Gold Mining Index, which starts in 1938. So both go back almost 100 years. That's excellent. I love these historical charts. And we can see that since 2015, gold stocks, from this bird's eye view, they've been in a big bottoming pattern relative to the stock market. And what do you know? That's very similar to what happened in the 1960s. Okay, here's the other chart. It's gold against the S&P 500. And this chart dates back 95 years. I love it. Now, one thing to keep in mind is the gold price was fixed until 1971, so that definitely has an impact on the bottoming process or bottoming base that we can see here. Really started to take shape in the mid-60s, and it continued into late 1971. So that the chart would definitely look different around those years, from 68 to 70. You know, if the gold price was freely traded, it probably would have risen mostly from 1960 to 1968. Then it would have had a big correction there from 68 to 70. So it would definitely look different, but the shape of the pattern in the ratio, it might not be that much different from where it is now. But, regardless, either way, in my view, there's still some similarity. The ratio here and now, or at least since 2015, it's been in a big bottoming pattern. And there's major resistance around 0.70, and if and when the ratio breaks above that, it has a measured upside target of pretty close to 1, where you could see the S&P and gold even. And I think it's possible we could see that perhaps 2 to 3 years from now. So now that you have the historical look, let's look at today. And this could be an important development. I've been harping on this a lot recently. I've talked about this numerous times over the past, but recently it's been important because we've seen a rebound in the sector, but evaluating the sector and its performance in real terms is important because that tends to be a leading indicator. And we're just not going to see a big sustained advance or breakout in the sector until the stock market runs into a big correction or sustained period of weakness. And so how do we evaluate that day to day and see what's going on? Well, you look at the ratios. So we have gold against the S&P at the top, GDX against the S&P at the bottom. And starting at the bottom, that ratio, yesterday it closed at a 3-month high. So we are seeing progress with respect to the gold stocks against the stock market. Now at the top, gold against the S&P is not quite as strong, but it has put in at least a short-term low, and time will tell. But perhaps that's the right side of a major double bottom, with the first bottom being in 2018. So if these recent lows and these ratios hold moving forward, that's really, really significant for precious metals. So there's some good things happening here under the surface. That doesn't mean precious metals are going to explode through resistance right now. They're testing and dealing with a lot of resistance, so they're probably going to pull back or soften in the short term. But moving beyond the short term, medium term, these ratios matter. And this development that we see, this could be really significant moving forward. And of course, don't forget the big picture, which is these ratio charts look a lot like they did in the mid to late 1960s and early 1970s, and then they exploded. And look at these. I mean, look at this 8-year resistance. Look at the red lines in both these ratios. I mean, they're setting up for potential big breakouts over the next year or two. That's all for today in this video. Hope you really enjoyed it. Check out all my work at TheDailyGold.com. Subscribe to this YouTube channel and consider my premium newsletter there, TheDailyGold.com/premium. Thank you so much, and I look forward to publishing another update for you guys in the days and weeks ahead.